So this question is on foreign subsidiaries. And I want us to read it. It says P Limited is a public limited company listed in the Securities Exchange. It has diversified its activities by acquiring S Limited, a company domiciled in a foreign country. Both companies prepare their financial statements in accordance with the International Financial Reporting Standards. The presentation currency of the group is the Kenyan shillings, while S functional currency is the franc. The draft financial statements for the year ended 31st December 2021 are as set out below. So for those who are just joining the class, this is April 2022, question number one. So we have the P&L and also we have the statement of financial position. Additional information, one, on 1st January 2021, the year is ending on 31st December 2021. Our year is ending on 31st December 2021, which means it starts on 1st January 2021. So note one, on 1st January 2021, P Limited acquired 80% of S Limited, 1,000 million francs, one ordinary shares for a cash consideration of francs 3550 million. Okay, so this company was acquired exactly at the beginning of the financial period. As at the acquisition date, the carrying value of S Limited net assets was franc 2,600 million, but the value was francs 3,200 million. So the book value and the fair value are different. In accounting, when you have fair value and you have the book value and they differ, then the fair value supersedes the book value. That is what you need to know. Immediately, the fair value is there. Whether it is less or more, then fair value takes it becomes the book value of the asset. So in this case, the book value was 26, while fair value 32. So 32 will take over. Now that is the correct value of the asset. The excess in fair value over the carrying value was due to an unrecognized brand with a remaining useful life of 5 years as at the acquisition date. So there was a brand there. The non-controlling interest in S as at the acquisition date was 1450 franc using the fine. As at 31st December, it was determined that goodwill on the acquisition of S Limited was impaired by 10%. The following foreign exchange rates are relevant. On 1st January actually there was a problem there. It was with 1st January 2021, not 2012, 2021. The rate was 5. 31st December 4. Average for the year ended 31st December 2021, 6. Required, determine the exchange difference, gain or loss, arising on translation of net assets and goodwill on acquisition of the foreign subsidiary. Then consolidated statement of profit or loss and other comprehensive income for the year ended 31st December 2021. Then consolidated statement of financial position. Correct. So in foreign subsidiaries, the main issue is you knowing the rates. Anything dealing with income and expenses, you translate using average rates. In this question, average is 6. Assets and liabilities, you translate using closing rates. Closing rate is the rate prevailing as at the acquisition date. No, as at the balance sheet date, sorry. Closing rate is the rate prevailing as at the balance sheet date. So balance sheet date in this question is 31st December 2021. So our closing rate is 4. Reserves, you translate using the historical. Historical is when the subsidiary was acquired. In this question, subsidiary was acquired on 1st January 2021. So our historical is 5. So I think we can kick off. A, they want to determine the exchange difference arising on translation of net assets and goodwill. So there are 2 in 1. So let me start with the exchange difference. So A1, exchange difference on translation. Exchange difference on translation. So, where's my ruler? On translation of net assets. On translation of net assets. So there. So we want to get the exchange difference on translation of net assets. So when you translate, of course, there will be a gain or loss. So we are translating from francs, so which are in millions. Give us here a rate, then we are bringing them to Kenya shillings. So have that arrangement. Have that arrangement. Have that arrangement. Have that arrangement. All right, so you start by saying, opening net assets. So opening net assets. So you check net assets at the beginning. So net assets at the beginning should be on 1st January. So check note 2. Check note 2. As at the acquisition date, you know it was acquired exactly at the beginning of the year in January. The carrying value of S net assets was 26, but the fair value was 32. So the opening net assets is 32. Then on that date, the exchange rate on 1st January was 5. So translate 32 at the rate of 5. So are we multiplying or dividing? Because if you mess there, in foreign, the issue is now the rates. Are we multiplying or dividing? Are we multiplying or dividing? Adam is saying kindly divide. Justus, we divide. Yes, we divide. You see, Alan is saying we multiply. We divide. And in all those questions of foreign I've ever seen, it's all about division, but you should check this way because it can mess you 10-0. They have said francs to Kenya shillings. So like, take the first one, the 5. You see they have said francs to 1 Kenya shilling. So you can pick like 5. Like the 5, because it's the 5 francs to Kenya shilling. So 5 is 1 Kenya shilling. What about the 32 francs which you want to translate? So just check around your same. So just check the arrangement. Francs to 1 Kenya shilling. So it means you just pick one for testing if you're not sure. But mostly we do divide. So divide that, what do you get? Divide that, what do you get? You get 640. And so it goes this way. What I want us to do, what we are doing, we need to understand what we are doing. To get foreign exchange gain or loss on net assets, check net assets at the beginning. So net assets at the beginning was 32. So we have translated this 32. Then we want to add what will increase the net assets for the year is the net profit. Net profit is what is going to increase the net assets. Then we compare with the closing. That is how we know that we gained or we lost. So you add net assets for the year, which is the profit. So add net profit for the year. Net profit for the year. So net profit for the year, go to P&L. Go to P&L. In P&L of S, you can be able to see profit for the year was 1,500. 1,500, but I have an issue with it. The 1,500, they are saying, check note number 2. Check that additional information number 2. That the fair value was 32, book value 26. It means there is a gain of 600. Then they were saying that gain was being, is supposed to be at a useful life for 5 years. So there is a surplus, there is a surplus of 32 minus 26. That is a fair value gain of 600. Then amortization, because they said it is a brand, should be 600 divided by the useful life, which is 5 years. It means during the year, we are supposed to amortize 120. So it was in the books of S. So the net profit for S for the year should be reduced with this amortization of 120. So you come here and say 15 minus 120. So 120, please show yourself where 120 is coming from. So 120 is coming from, they are the people who have said that the market value was this, book value is this. So there is a surplus of 6. Then the surplus of 6, they are saying, had a useful life of 5 years. And you see it was a brand. Brand is not depreciated. A brand is amortized. So it means amortization for every year is 120. And now because it was in the books of S, it means the profit of S should be adjusted with that value. So that one, 15 minus 120 should give us how much? That one should be 13 what? 1380. So 1380. Then this is profit. Anything profit, anything expense, you translate using the average rate. Remember this one was open in net assets, but this is profit for the year. Profit and expenses, average. So average rate here was 6. So 1380 divided by 6. 1380 divided by 6. To 30. So bring here 230. Then add. So this is opening plus during. We want to compare with the closing. So I want you to add this one here. This is 870, but skip like 1, 2 lines, 1, 2, then add for me this one. It's equal the same line like here equal to kidogo, then 1, 2. I know why I did that. So add this. This is 40, 45, 80. So opening plus during is giving us closing. So right here, closing net assets, closing net assets, closing net assets is 4580. Can you translate this closing net assets at closing rate? Our closing rate is on 31st December, which is 4. So can you translate the closing net assets, this one, 4580, can you translate it at 4? Adam, you are getting 1145. So when we translated opening and profit, we got 870. But this closing net assets, if you translate at closing rate, it gives you 1145. There is an increase. The expected or the anticipated value was to be 870. So if you translated this and you get 870, means there is no foreign exchange gain or loss. But you know, during the year we have been translating, then when we subject what we have to the closing rate, it comes to 11. And during the year we did all that and we got 870. So this increase is foreign exchange gain. So there is foreign exchange gain. Foreign exchange gain of how much? The increase 275. So that's the gain. So that one is supposed to give you 3 marks. This one is 3 marks. So where are the 3 marks coming from? Here. 1, 2, 3. Those are the 3 marks. Those which are marks are the ones to be marked. So down here, not a must, but you can just tell me for formality. You say now, noisemakers, NCI. Remember, parent is controlling 80. No, it is not 6. 6 is the entire A. 6 is the entire A. And A, they want exchange difference and goodwill. So this one is taking 3, then goodwill is going to take the other 3. Adam, I hope you've seen that. So the whole 6 is not allocated here. This one takes 3, goodwill is taking another 3. So NCI will take 20% of the foreign exchange gain. Holding company will also take the balance, 80% of 275. How much? How much? How much? How much? $55. So balance is 220. The balance should be 220 to be 275. They will help us ahead. Who has a question on this? We are done with the foreign exchange. So you take the opening net assets at the opening rate. Add the profit for the year at average. So this one should be the closing, translated closing. But if you translate the total closing, you are getting at closing rate, you are getting a different value. So the difference between the anticipated value and the actual value as per the closing, that is the foreign exchange gain or loss. But now that it is an increase, we talk about foreign exchange gain, 275. It seems no question. So let's calculate goodwill. Let's calculate goodwill. So Roman 2, it was 2 in 1. So goodwill So goodwill, the standard requires, I don't know that the standard requires always the easiest way to do it. Calculate it in foreign, then translate. Actually, that's how it should be. Because the main aim is to know whether we gained or we lost on the goodwill. And how will you know this? You first of all calculate goodwill, then you translate the goodwill. So have here the same approach. Have that. So now you come here and say purchase consideration. How much is the purchase consideration in that question? How much did the parent pay to acquire the subsidiary? Purchase consideration, who can be able to see it? Alan, Faith, Adam, Janet, Justus, Mary, Mark, who can be able to see that? Said, Nora, Monica, Thomas, are you able to see it? Just check. I'm not taking you bio. Just check. Yeah, it is. No, they are not ordinary shares. It is 35.50 straight. They acquired 1,000, those shares, the shares the company was having, they acquired. So they never, we always acquire shares. So we normally pay for the shares. Unless the parent is giving out their shares to acquire, we always acquire shares. It was just trying to be petty with those things to confuse us. Otherwise, the purchase consideration is 35.50. So this is 35.50. That is the purchase consideration. Then add the fair value of the makers. So add fair value of NCI. This is full method. So fair value of NCI, check in note number 3, 1450. So this is 5,000. Less net assets. Net assets on the date of acquisition, net assets on acquisition is the 32. The book value was 26, but they are saying fair value is 32. So you go for the 32. Meaning that goodwill on acquisition. Goodwill on acquisition. Remember, goodwill is computed on acquisition. Goodwill on acquisition, this is 1,800. Now that is where we start translation. Goodwill on acquisition, 18. Can you translate that goodwill on acquisition to Kenya shillings? On acquisition, the rate was 5. So take this, divide by 5. What do you get? On acquisition, the rate was 5 in January. How much do we get, honorable members? 18 divided by 5. You get 360. 60. I hope that is okay. So we get 360. When you translate that, then they said there was impairment. Check note number 4. Goodwill was impaired by 10. So less impairment. Impairment, 10%. So 10% of 18, 180. Also translate that impairment. Impairment is an expense. So for the year, you divide by average. Expense and income average. So average 6. 180 divided by 6. 180 divided by 6. 180 divided by 6, 30. So you subtract 30. Meaning, hiyo funga huko juu, hiyo uteremshe huko chini. Let them not be in the same line. So 18 minus 180, how much do you get? How much do you get? 1620. So 1620 should be the unimpaired goodwill. So unimpaired goodwill, which is at the end of the year carried down. Unimpaired goodwill carried down is 1620. Can you translate this closing goodwill at the closing rate? Closing rate is December. So December 4. So 1620 divided by 4. 1620 divided by 4. What do you get? 405. And if you take this minus this, does it come here in the figure 4? How much? 360 minus 30. That is 330. So the closing goodwill ought to have been 330. But when we translate the closing at the closing rate is giving us 45. But when we go procedurally from acquisition, we are getting 330. So the increase in goodwill is a foreign exchange gain. So foreign exchange gain of how much, members? 330 to 405. Gain of 75. Gain of 75. So goodwill computation is also another 3 marks. Where are the 3 coming from? 3 comes from this, and that. Those are the things to be marked in that goodwill. Those zingine hakuna marks, and I'm being very honest with you. They mark in Kenya shillings. So those are what to be allocated the 3 ticks. And we are done with that. Maybe the best we can do is to apportion this foreign exchange gain. So NCI will go with the 20% of 75. Now, then holding goes with 80% of 75. Give me those figures. Said is requesting for prayers. Perfect, no problem. 20% of 75 is how much? 15 and 60. 15 and 60. We are done with part A of the question. Who has a question before we go for prayers? Thank you. Then go for prayers. If you see a question, kindly ask before we kick off with the P&L. So, fine, let's pray. So break is over. Prayer break is over, and I wish us to continue. Hope there was no question there. Now we have to continue with B. B is consolidated statement of profits or loss and other comprehensive income for the year. So right there, the parent here is P. So P group, allow me to delete this. So have that. So on foreign is about rates. Rates is the issue. Disposal period, step period, foreign rates. So you need to know. So unless stated otherwise, P&L, everything average, 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 average. Kindly note that. P&L is average. So there we go. Susan, I may or may not. When I record the class, I don't know why you are disturbed with the recording. Relax, because what we are doing tomorrow is not related to this. You know, when we record, maybe you don't know how this recording operates. When you record up immediately after class, it requires like 20 or 30 minutes, 20 to 30 minutes to compress the video. Then after that, I start loading. Loading it to the YouTube will take like 8 to 10 minutes or so. So for me to finish that one video, I need like 40 minutes. Imagine 40 minutes after class and I was here by 5:57 a.m. Others are going to lunch. So also be patient. But what I know by tomorrow, even today I can, but I hope you may know how it operates. It requires like 30 to 40 minutes to prepare it. So kindly just understand, but I will share. So have it in Kenya shillings. Have it in Kenya shillings. So let's follow it the way it is. Revenue. So revenue. So parent 2145 plus 10,500. The subsidiary was a full year. It was acquired in January. So 10,500 divided by average. So for P&L, you go for average. Unless examiner send it to me, but mostly they are good. Just go with average. So average was 6. Yes. So all the income and expenses of S just die with 6. So you divide. We are dividing to translate to Kenya shillings. So this one you divide by 6. There was nothing like intergroup sales. So there is nothing we are subtracting. How much? So imagine the issue in P&L will be the 6 issue. Once you know 6, you are good to go. So how much is consolidated revenue? Somebody? Yeah. So how much? Tusonge ndio tumalize. We have to finish this question. 12,645. I hope that is confirmed. Are you sure? 12,000. If this is 2,000, no. It can't be there. Hata kama sina hiyo answer. 38.95 seems reasonable. Many people are having that. So 38.95. And then then cost of sales, the same, 915 plus 63 divided by 6. There is nothing like depreciation here. How much is that for cost of sales? For cost of sales, that one will be how much? 1965. So 1965. Therefore, gross profit will be how much? Gross profit will be that minus that should give us how much? 1930. We proceed. Distribution, you just add 150 plus 750 divided by 6. That one should give you how much? How much do we get out of that? Nafika 2 something. 275. Then we go to admin. Admin itakuwa na issue. Admin 345, 1350 divided by 6 plus impairment. Impairment was 30. The translated impairment, kindly check after calculating goodwill. Then, yes, the 120. There was 120. Remember the 120 for amortization. Remember there was amortization of brand. So amortization and impairment, those ones you put under admin. 120, but you divide that 120 by the average rate of 6. Kindly don't copy. If there is anything you have not understood, allow me to know. $620. Then there is investment income. Investment income, even there is nothing to worry about, 15. That one you add. Finance costs, 30 plus 150, 150 over 6. That one will be, how much is that? Honorable members, finance cost 150 divided by 6 plus 30. 55. So give me profit before tax. Give me that one very fast. So profit before tax is 995. Thank you. Then income tax 165 plus 450. 450 divided by 6. What do you get? To 40. So PAT will be how much? Profit after tax 755. Other comprehensive income so other comprehensive income, what your foreign exchange gain? Foreign exchange gain is other. It is not the normal business trading. So exchange gain, there were two of them. Net assets and on goodwill. On net assets and on goodwill. Net assets we gained how much? How much did we get on the net assets? Somebody? $275, and the other one? The other one was goodwill burning 75. 330, 75. Therefore, total comprehensive income, you take 755 plus this. Tell me what you are getting, then we share to them. So total comprehensive is 1105. Who has a question up to that stage? Any question? Because now I just want us to go and share this PAT and total comprehensive, then we are done. Justice, do we use holding company attributable? Ndio hiyo sasa tunaenda hapo sasa. Yes, that, just sasa tunaenda hapo kwa attributable to NCI, then attributable to holding. No, here you bring the total. Here you bring the total exchange. Then we are going to share them now with minority and parent. Here you bring the total. Kindly. I hope that is clear. Good. So say up here, PAT attributable to NCI and holding company. NCI holding company. And PAT is this one, 755. So we will share. You share that profit, the 755, between the two. Then total comprehensive income to minority and to holding. So total comprehensive is 1105. So we want to share those two. All right. The only thing which, for all this, once you get this one, PAT to NCI, is also given as orientation. So let's have a working outside there. You say PAT to NCI. PAT to NCI. So NCI, remember they normally take profit after tax. The profit after tax of the subsidiary. So PAT of S. Profit after tax of S. So check in the P&L. Check in the P&L. You'll be able to see where is this? You are able to see the 1500. Yes, you are able to see 1500, but the 1500 divided by 6 average. So divide by 6. That one will give you how much? 15 divided by 6 to 50. You less impairment. Impairment was 30. 30 was already translated. So just give minority 20%. Give them 20% of 30. 20% of 30 should be 6. Then there was also amortization. If you can recall, there was amortization of 120, but 120 was before translation. So also divide by 6, then give them 20. What do you get? 120 divided by 6 times 20%. What does that come to? Even this one tumekosea, so this is 4. Hata hii tumekosea hapa. Give them 20. Usiwafurahisha hapo na 250 yote. Give them 20%. Just redo for me that. Give them 20% of that. 20% of that will be how much? 50. So that is all. There was no UPI in this question. So how much is going to minority? How much are we taking to minority? Minority is going with how much? 50 minus 6 minus 40. So minority are going home with 40. If there was UPI, check whether it was upstream or. So now, here, you bring 40. So parent will go with total minus this. So take 755 minus 40. So the parent is going with how much? Parent going with how much? Parent going with how much? 715. Thank you. I have 20 for total comprehensive. Let's go to total comprehensive. Total comprehensive, how did you get the total comprehensive in the first place there? Total comprehensive, we took PAT of 755, which has already been shared, 755 plus the foreign exchange. Good. So apply the same here. NCI from PAT they have gotten 40. Then exchange gain. Can you give me the exchange gain on net assets and exchange gain on goodwill, which were going to NCI? We did them, so you have them. How much? On net assets, they got an exchange gain of how much? So correct, that is now where the question comes up. You separate them now. So total comprehensive, you take what they have gotten in PAT plus what they got in the net assets. So Adam is telling me they got kuna mali NCI walipata 220. Hebu angalia vizuri. Hakuna mali walipata mingi hiyo. Just as 55, yeah, I think there's somewhere they got 55 and somewhere they got 15. When we calculated net assets, the very first one required, hapo mwisho vile tulimaliza we share to them. NCI took how much, parent went with how much. Then goodwill, after computing goodwill, angalia hapo chini, we also share. Can we confirm 55 and 15? Because I can see people giving different figures. Maybe you are 30 will can people confirm kindly? Yeah, saying 55 and 15. One more person, Monica, 55, 15. I hope everyone is seeing that. Sure. So in total, this is 70, 110. They are going with 110. So to get parent, take this total minus this. But I would want us to check, to counter check. This minus this comes to how much? This minus this. Leo jioni mnaenda pole pole. Sijawazoea na hiyo speed yenu inakuanga mbio sana. 995. But we can prove parents in the profit they got 715 for PAT. PAT they have gotten 715. What about on net assets and goodwill? Where you pick this and this? What did parent will what value and what value? So that we add and check if it will be this one here. Parent got what and what? 220 and 60. So if you add this plus this plus this, it is coming to 995. It is coming to that. Yes, then we are done. The examiner wanted 6 ticks. They only wanted 6 to get the 6 marks. I hope that is achievable. Who has a question in the P&L? I want us to go to the statement of financial position. Any question? For now, we have arrived at a certain figure. Sawa. If no question, we move forward. Allow me, let's do what goes the equity of NCI, then retained earnings. Ndio tukianza tusikuwe na stopover, tuende mpaka mwisho. So let's start with retained earnings. Though I always like starting with NCI. Let's start with retained earnings. So out there, retained earnings. So retained earnings, check for P. Carry down, check their balance sheets. And I want to check whether we are together. How much is the retained earnings of P carried down, which you can see? How much are you seeing? $25, say, 25.60. Yeah, people are seeing 25.60. I've also seen 25.60. I hope everyone sees that. So P 25.60. But for S, you bring post-acquisition. So add post-acquisition, profits S limited. Post-acquisition is the profit S made after it was acquired. So after it was acquired, that company was acquired just at the beginning of the year. Yeah. So the profit they made for the year is the post-acquisition. 15. So just take 80% of 15 minus, I want to compress it, minus the amortization of 120, minus impairment of 30. No, that won't work. 30 impairment had already been translated. Yeah, already translated. So this one, divide by 6, minus 30 for impairment. Yes. Yeah, that one. So this is amortization. This is impairment. This is the profit. So take 15 minus 120 divided by 6. I've separated because 30 was already translated using 6. So I don't want to translate it anymore. So 15 minus amortization divided by 6 minus 30. What you get, take 80%. Tell me what you are getting. Tell me what you get. So many people are getting 160. So I just pick that 160. And please, there is nothing. It was impairment amortization. There was no depreciation. There was no UPI. Can you add? That is the retained earnings. Can you add? Total will be how much? Total will be how much? 27.20. All right, let's do NCI. So we want to know the equity of minority. So the equity of minority, you take their fair value on acquisition. Fair value on acquisition. Their fair value on acquisition. So on acquisition, the fair value of minority was how much? Can you check? Though I can see it. How much are you seeing? On acquisition, fair value of minority, which you can see. How much? 32. Janet. Well, hata hiyo mchezo. Yes, it was 1450. 32 was the net assets. So the minority was 1450. Why are you just throwing figures? What are you saying, Gasnet? That is note number 3. It was 1450, but remember 1450 was in that currency, whatever franc. So 1450, but bring it to Kenya shillings. I divide by 5 because on acquisition the rate was 5. On the date of acquisition, the rate was 5. So what is 1450 divided by 5? 1450 divided by 5. 1450, 290. 290. Add to them post-acquisition profits. Post-acquisition profits. So post-acquisition profits, anazidi tujisumbue ama tuweke hiyo 40. But it is this one, right? The same thing. But now you give them 20. 15 minus 120 divided by 6 minus 30. But it's this one here. Whatever we got here, it will give you the same thing. This one. Because me 15, ndio hii 30, ndio hii mambo ya 120. It should give you 40. But just confirm. Can you confirm that? Confirm that. It should just be 40. Yes, that is 40. Then now, there was exchange gain. That exchange gain you will credit to them. It's part of their capital claim. So exchange gain, net assets, then also on goodwill. They got something, they will bring you a lot of problems. They are here. These ones, check these ones here. Exchange gains, there is 55 and there is 15. It will be part of their capital claims. So bring them here. Here they got 55, here they got 15. Give me the total NCI. Give me the total 400. So kindly record 400. And please allow me, if there is a question, ask before I start the consolidation. So fine, 400. Let's do the balance sheet. Let us do the balance sheet. And I want to go to specific. Maybe Mungu anajua labda umesahau, that is why I'm picking randomly. In the balance sheet, which rate are we going to use? Faith. Which rate are we going to use for assets and liabilities? Actually, Faith, I've selected you because today you are quite quiet. Which rate are we going to use?
6 or what? I'm not sure. I think 6.
Yes.
Is it 6? I'm not sure.
I can't hear you well.
Reduce the volume. Is it assets? 6? I'm not.
Yes.
Assets and liabilities.
Yes, we are going to use which rate?
The average.
Assets and liabilities, we are going to use which rate? No, I want to be told.
4. 4.
Faith.
Mwalimu.
Yes. Mimi ni mwalimu niko hapa. Which rate are we using?
Closing rate.
What is the closing rate in this question? Which is the closing rate? We have 5, 4, 6. Which is the closing rate?
4.
Yes, we use 4.
Mm.
Kwa nini unataka kushtuka Faith? Do you have some external forces behind you there? So, unaona hata kina Mary washakasirika. Sasa hapo ndio sasa mwalimu inakuwa calling. You have to balance the class. Because akina Mary wanasema ningekuwa na kiboko. So, Faith, I hope I've gotten you off guard. Assets and liabilities use closing rates. Closing rate is the rate as at the balance sheet date. Balance sheet date is when we are required to prepare the balance sheet. So check when you are required to prepare balance sheet, use that rate for assets and liabilities. So for the assets and liabilities, tunakufa na form mpaka mwisho. Kindly. So let's say there. Well, let's keep quiet. So P group. Let's have that. Susan, the way you have been giving me figures here, make a copy. How comes unauliza? Or you came late, but you have been providing us with answers. I remember you said you came late. Just as I've told you the question, what has made me laugh is the way you have been giving me answers. Oh, sour. But thank you because you have been giving answers. So at least you have been engaged. So let's go to their balance sheet. Let's go to their balance sheet. Non-current assets. Non-current assets. PP. So PP 4850 plus 7 divided by 4. Give me that one. So that one comes to how much? Hapo mmechelewa. So that is, how come some penny answers? 6,600 as per Monica. Can you confirm? I don't know why people have stayed there for that long. 6,600. Yes. Is 36. It can't be 36. Somebody pegando 48. Say it. What are you eating? How can it be 36 if this one is 48? Then investment in S. In S, replace it with goodwill. Goodwill Please, there was a check our goodwill computation. Just go back kidogo pole pole hapo nyuma. Check goodwill. I want us to check something there. So when you check goodwill, how much did we get as when we translated the closing, the unimpaired goodwill, we translated, what did we get? Somewhere there. Check for me those figures. I've forgotten about the figure. It was how much? It was 4 something. Yeah, it was 405. Yeah, it was 45 because this plus this was coming to 330. Then we translated the 1620. We got 45. I hope everyone sees 45, and 45 was after impairment. Everyone sees that? One person can say yes. Mark said yes. So 405. Then there is nothing. Add for me the 2. Add for me the 2. So the 2 comes to 7005. Thank you. Current assets. Unifanyie favor. That's that I'm subjecting you. And faith you will unanipea your answer. There is nothing to be adjusted on assets. Yeah, hakuna. There is no intergroup balance, there is no UPI. It's a matter of addition. Do the 3: inventory, receivable, cash. Give me the total assets. Give me the value of total assets. That is what I want. Faith, that total should come from you. I want the total assets, and that should be very fast. I'm waiting. So 10,640. Watu wengi wako na 10,640. Janet, why are you deviating from others? Janet? Let me check. Let's just counter check, no issue. Kila mtu ataona yeah. There is something I left. Now this is ili makosa yangu. I know ni makosa yetu. Kwa nini nyinyi hamkuona? There was ile 120 tumeshindilia. There was a brand. Just fix it here. In a current asset. They said it was a brand before current assets. There was a brand, and the brand was 600. You remember the 600, how it was coming up? Or let me just read this note. Where's the note? Check this note number 2. They said the excess in fair value for the current was due to an recognized brand with a remaining useful life of 5 years. So the brand, the difference, 32 minus that. So there was, that is like revaluation, but they said this brand. So 600 divided by, now closing, we are closing, divide by 4. Then whatever you get, you take 4 over 5. I pray God you understand why I'm multiplying by 4 over 5. But I can explain so that you understand. The brand was being amortized for 5 years. So if you remember, the 600 divided by 4 is what gave us 120. The 120 we have been using. But it was being amortized for 5 good years. And we have amortized it for 1 year. You know, when you divide by 5 is like saying 1 over 5. So the value of the brand is remaining worth 4 years. So you take 4 over 5 times this. I hope that is clear. Randomly, Mary, Kanaka, have you understood the concept of 4 over 5? Why I'm multiplying with 4 over 5? Wow. Check here. The brand, maybe I can do this. It was 32 minus 26. This is how we got the 6. Then now the 6 we have to translate. So 6 divided by 4. 6 divided by 4, that one is giving us. No, you see 120. How much is that? The 6 with 4. That is 150. So this is 150. Then, so this is to translate in Kenya shillings. Closing rate. Then you need to subtract the amortization. So the amortization, they said the useful life was 5 years. So it is 150 minus 150 divided by 5. Like that. So that is 30. So 150 minus the 30, that one gives you 120. But I'm telling you that one is taking you a long process. At this stage, instead of saying 150 minus this, when you to pay 150 times 4 over 5. The useful life was 5 years. This is only 1 year because you have not multiplied with it. So this is just 1 year. It's amortization for 1 year. So it means you are remaining with 4 over 5. You just get the same thing. I hope now it is clear. For those who said no. I hope now it is clear. It is now clear. Yes. Now it is clear. So that brand 120. Please just do for me this amendment. Then I want to counter check the assets you gave me. Can you add that? The non-current assets will be Non-current assets, we will adjust it to how much? $71.25. All right. Let's bring current assets. Let's bring current assets. Current assets, we have inventory. Inventory is 1030 plus 24, but 24 you divide by 4. What did you get? Now, because you have the answers, we can kill them very fast, very fast. $16.30. Many people are getting that, so I'll just pick. Then receivables 970 plus 1960 divided by 4, 1460. Said I hope 1460 is for that. Good. Then cash is 410 plus 540 divided by 4. I thought nikigeuka napata answer. So that one is 545. So total assets will be how much? Total assets will be how much? 10,760. Mark. Somebody to confirm. Somebody to confirm. Yes, that one has been confirmed. Equity and liabilities. Equity and liabilities. Ordinary share capital, parent only. Ordinary share capital, parent only. So that one has no issue. Pick parent. Share premium, also pick parent. Pick, I'm joining you. All right, so ordinary parent only, 15. Share premium, parent only, 500. Then exchange reserve. Exchange reserve for parent, NCI. For parent, it was how much? What did parent get? I've deleted. Parent got how much for net assets, then on goodwill. The exchange gains. We need to break them under equity for the parent. For NCI, they have taken in their capital. How much? Help me with those figures. That's going to for long. So you need to 20. Net assets and goodwill. The exchange reserve for parent. Yeah, the 220. 60 or 60. So this is 280. Exchange reserve for parent comes there. Then you go to retained earnings. Retained earnings, check our working. We have done a working there for retained earnings. I can still see mine. 2720. I hope you can also see yours. I hope you can see yours then. NCI is the last working we did. I'm seeing 400. Can you add for me the total equity? We are finishing actually. Total, I'm told 54. Thank you. Let's go to non-current liabilities. Non-current liabilities. So non-current liabilities, we have 10% bond. 10% bond is 820 plus 2640 closing rate divided by 4. How much is that? How much is that? $1,480. Then we have deferred tax, 740 plus 2160 divided by 4. What do you get? What do you get? 1280. Then we have current liabilities, payables. Payables is 1330 plus 2240 divided by 4. What do you get? $1,890. Then we have current tax, 520 plus 760 divided by 4. What do you get? 710. That's per mark there. So can you add whether it is balancing with our total assets? So total equity and liabilities. Total equity and liabilities. It is balancing with our total assets. Total assets, we got 10,760. Can you check if it's balancing? We call it a day. Yeah, Adam is saying it is balancing. Any other person who has balanced 10? Janet, yes. 10,760. Question. I really need your honesty from that question which you have seen. If you compare this with disposal of subsidiary, which one seems to be more better? This or disposal? Which one can you pray for? This one. So mpaka mwenye alikuwa kwa gari Susan, sio ulisema ulikuwa kwa gari. Yani okay, everybody is saying this one. Let's pray. But I need to be very honest with you. Hiki kuja ni hapo katikati. Ideally this time they should bring disposal. Disposal ni shida tupu. Si shida tupu. Wanakuwa disposal actually this semester, but they can still bring foreign. We shall pray they bring foreign. But then foreign inaka maneno. Foreign, faith, foreign ni kushika rates. P&L average. Balance sheet closing. Equal to hakuna story ingine. But even disposal is not bad. Disposal ni kujua tu hivi. Disposal operates this way. Disposal inaenda aje? Disposal unajua inaenda hivyo. Disposal goes like that. Even disposal. Step, unajua they are sisters. Step inaenda hivyo. Hii ni step. Disposal you check from the beginning of the year up to the date of disposal. So you time a portion from here up to this date. That is P&L. Then if you go also share our joint venture, it will not appear there in the balance sheet. Balance sheet, we ignore. P&L from here to here. So you operate backwards from the date of acquisition, beginning of the year to the date of disposal. But step from the date they added additional shareholdings moving forward. So, Misawa, and also just as it is good when they bring things which people are, which watu wataki sana. Wakileta foreign na kila mtu, umeona kila mtu anasema foreign. Sasa unajua hiyo watu wanapita sana. Afadhali hiyo yenye mtu anaingia na handkerchief. Yenye lazima watu wapambane. So, but if they bring, well and good. So, dear guys, let me leave you with one assignment. Where foreign, I said I'm only doing 2 questions. So I'm leaving you with one which will finish in our next week class. Write this. So you do this one first, is when you go to that other one. So just a minute, I check. Disposal, foreign, not disposal. I check foreign. Yeah, for you people. I'm so tired, very tired. Foreign. Yeah. Ouch. November 2016, question 1. November 2016, question 1. Alafu Aki, please, I hope amunichuki as nawawekea classes sana. Hizi vitu tukienda kama class hatuwezi malizana, tusipomaliza syllabus tutaanguka. That is a true fact. If we don't finish, we just fail. So why should you fail when I know the reason? The reason is not finishing the syllabus. So I'm squeezing so that we finish. So nilifikia classes kwani nafikiria sisi hatuna kazi nyingine. It is possible for people to say that. Lakini sasa shinda, I hope mnaelewa why we have to undergo through this. So just bear with us for the remaining 3 weeks. The 3 are my head. But me, I'm finishing officially on 27th. 27th, you will not see me anywhere. So thank you. Do have a good night. We shall meet tomorrow at 7:30. Naona Titus haya ameshaanza kuuliza hata kwa group. When is time for tomorrow? 7:30. 7:30 a.m. I thank you also for understanding. Go and cook for the family. If the video comes today, fine. Latest by tomorrow. Thank you.